Welcome to the Riskwiser Zone, where we navigate the twists and turns of the stock market and bring you the latest news and insights from the world of finance. I'm your host, Louis, and I'm excited to share today's top stories with you. As we dive into the day's headlines, it's clear that the Indian IPO market is buzzing with activity. The Economic Times reports that the IPO market is no longer just about fitting into a traditional sector, but rather about companies that sit at the intersection of platforms, technology, and operating assets. This hybridization is not confined to consumer-facing businesses, with niche industrial players and innovative companies like InnovativeView, which provides automated security and surveillance solutions, also eyeing the public markets. We're seeing a growing trend of unique, hard-to-classify businesses with defensible niches, scalable economics, and global aspirations entering the IPO market. Companies like Jirai Fitness, PhonePe, Turtlemint Insurance Marketplace, and Credila Education Finance are just a few examples of this new wave of IPO candidates. And with the Indian economy maturing, capital markets are naturally opening up to these innovative businesses. In other news, Modulus Alternatives has appointed Sandeep Agarwal as its chief executive, effective January 1. Agarwal brings over 25 years of investment banking and private credit experience to the table, having worked with top firms like Credit Suisse, JP Morgan, and Deutsche Bank. This move is likely to bolster Modulus's position in the alternative asset management space. As we continue to monitor these developments, it's essential to remember that the stock market can be unpredictable, and it's crucial to stay informed and adapt to changing circumstances. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and geopolitics, where the lines between risk and opportunity are constantly blurring. Today, we're looking at how global events are impacting markets, from the ongoing situation in Venezuela to the latest developments in US-China trade tensions. Asian stocks have taken a hit, with many major indices falling for the second day in a row. This comes as optimism over solid earnings growth and contained inflation begins to wane, faced with rising geopolitical uncertainty. The U.S. actions in Venezuela, including seizing sanctioned oil tankers, are adding to the mix of concerns for investors. Meanwhile, Treasury yields have fallen, with the 10-year yield dipping to 4.45% amid mixed U.S. economic data. This has kept alive bets on further Federal Reserve interest rate cuts this year. Gold and silver have steadied after an initial decline, as investors weigh the potential impacts of these global events on their portfolios. It's not just Venezuela. Tensions between China and Japan are also escalating, with China launching an anti-dumping probe into a key chip-making material from Japan. This dispute has the potential to further disrupt supply chains and impact the tech industry globally. As we navigate these complex waters, it's essential to consider all angles and potential outcomes. The interplay between geopolitical events, economic data, and market reactions is nuanced and multifaceted. Investors are advised to stay vigilant, diversify their portfolios, and keep a close eye on developments that could shift the risk landscape. The upcoming U.S. payrolls report and the Supreme Court ruling on President Donald Trump's global tariffs will be closely watched, as they have the potential to significantly influence market sentiment and direction. Welcome back to the Riskwiser Zone. Today, we've been exploring various facets of global risk, from economic trends to geopolitical shifts. As we wrap up this episode, I'd like to bring to your attention a developing story that could have significant implications for international relations and financial markets. It appears that the United States has taken a bold step in its ongoing rivalry with China by arresting Venezuelan leader Nicolás Maduro. This move is seen as a brazen challenge to Beijing's interests in the region, particularly given China's substantial investments in Venezuela's oil sector. China has lent billions of dollars to Venezuela over the years, and its state-owned companies have significant stakes in the country's energy industry. The arrest of Maduro could potentially jeopardize these investments and create tensions between Washington and Beijing. As we analyze this situation, it's essential to consider the broader context of U.S.-China relations. The two nations have been engaged in a trade war, and there are concerns about China's growing influence in Latin America and beyond. The implications of this development are far-reaching, with potential consequences for global energy markets, trade flows, and diplomatic relationships. As investors, it's crucial to stay informed about these geopolitical risks and adjust your strategies accordingly. In conclusion, the arrest of Nicolas Maduro marks a new front in the U.S.-China rivalry, with significant potential consequences for global markets and international relations. As we navigate this complex landscape, it's essential to remain vigilant and adapt to changing circumstances. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.